Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, welcome to today's Zacks top stock of the day. My name's Andrew Rocco. I'm a stock strategist here at Zacks, and I'll be covering our first top stocks. So VIP.com is China's third largest e-commerce platform. VIP Shops benefits from the massive market it serves. So VIP Shop serves over 300 million customers. Obviously, they're based in China, and the many companies it counts as partners, they have more than 20,000 partners. So they have a bunch of partners to help them move product to all of these customers that they have. And VIP.com is ranked number one in China's online discount market. So they own the discount online market with a 38.1% market share. So they're pretty dominant in their space. So before we get into the stock itself, I want to talk about the end of China's zero COVID policy, because I think this was really sort of the proverbial rock in the shoe for VIP shops. So China had one of the most stringent COVID-19 lockdown policies in the entire world. In fact, at times, Chinese President Xi was willing to allow the Chinese economy to come to a screeching halt almost to tamp down the number of coronavirus cases. So throughout this time, VIP shops and most other Chinese companies suffered as a result. However, in the past 3 quarters, VIPS has turned around its earnings per share picture. They've actually grown earnings per share by 12%, 55%, and 27%. So they've really seen robust earnings growth. And despite the widely publicized reopening of the Chinese economy, analysts seem to be slow to change course. So that's resulted in some massive earnings beats. In fact, in the past 4 quarters, VIPS has beat earnings estimates, including surprises of up to 42.3% and 33.33%. So some really strong earnings momentum over the past 4 quarters. And let's get into what the analysts are seeing now. So Zacks in-house studies show us that one of the more important tried and true indicators for a stock's direction is recently revised upward consensus estimates. And you can see the consensus estimate trend that we have shown here. It appears that analysts are catching on to VIP Shop's renewed growth trajectory. In the past 7 days, in fact, estimates for 2023 and 2024 have been revised higher. So not only are the estimates strong, they're getting stronger in recent days, which is exactly what we like to see. Beyond that, one of the reasons I'm really interested in VIPS shares are that it's attractive as a potential GARP play. So GARP stands for growth at a reasonable price. And that strategy is an approach that seeks to identify stocks that offer both growth potential and a reasonable valuation. So the strategy aims to balance the benefits of investing in growth companies while limiting the potential risks of kind of paying too much for the company. So the strategy typically involves looking for companies that have a history of strong earnings growth. VIPS certainly ticks that box, but they're also trading at a reasonable price based on metrics such as the price to earnings ratio. So VIPS has a PE ratio of 9 times earnings, which actually is the lowest it's been in a decade. So that's what the chart I'm showing you on your screen shows, lowest in a decade for PE ratio. But not only is the valuation attractive to its history, it's also attractive relative to its peers. So the trailing 12-month PE of 9.64 times earnings compares favorably to the internet delivery services industry. That's the industry VIP is in. That number is 60. So really favorable comparison versus the industry as well. And the key advantage of a GARP strategy is that it can provide investors with exposure to high growth companies without paying excessively high prices. So by focusing on those type of companies that have strong earnings growth history and are trading at reasonable valuations, we can potentially take advantage of that growth while managing our risk from a valuation perspective. And then I mentioned VIP's group, the internet delivery services industry. It's actually ranked in the top 2% of industries tracked by Zacks. So it's ranked number 5 out of 250 industries. And because it's ranked in the top half of Zacks ranked industries, we expect it to outperform the market over the next 3 to 6 months. So studies have shown that roughly half a stock's price movement can be attributed to a stock's industry group. And the top 50% of Zacks ranked industries tend to outperform the bottom 50% by a factor of more than 2 to 1. So we want to focus on those top stocks in the top industry groups. And again, VIPS meets those metrics. Another thing outside of fundamentals that I really like to focus on is simply the relative strength. And the blue line on the chart represents VIPS, which is up 60% over the last 12 months. In that same period, the S&P 500 is actually down 12%. So when you're searching for a true market leader, 2 of the most powerful traits we like to look for are strong uptrend and relative strength, and VIPS holds both of these characteristics. And it's especially impressive when you consider the volatility that occurred in global markets during this time period. So from a technical perspective, we have a daily chart of VIP holdings up there. From a technical perspective, the stock is pulling into the 50-day moving average for the first time after a major move. What I found in my studies is the first tag of that 50-day moving average after a strong trend tends to give us an area of institutional support, a good risk to reward zone. So that's it for my top stock of the day. And I'm going to pass it over to my colleague, Nina.
Thanks, Andrew. I'm Nina Mishra, and my top pick today is Airbnb. Ticker symbol is ABNB. And we know that Airbnb is a company that provides a marketplace for connecting hosts and guests to book rentals and experiences. This is a very new company founded in 2007, and it went public in December of 2020. So Airbnb is benefiting a lot from the rise in rise in travel demand, post-pandemic travel demand. And we know that lately consumers have shifted their spending from goods to services, including travel. So they are traveling a lot and they are spending a lot on travel. And there was an interesting article in CNBC recently which says that millennials are not only traveling more and spending more on travel, they are also traveling differently. So they want to take trips that are focused on mental health and wellness, focused on specific experiences. And millennials who are traveling with children, they want to rent houses that are suitable for kids, have kitchens, more bedrooms, etc. So thanks to those kind of travel demands, Airbnb posted its first ever annual profit for 2022, which is great because this is a relatively very new company. And let's take a look at the recent results, the fourth quarter results, which were very good. The company beat on the top and bottom lines. Let's go and look at some of the charts on Zacks.com. So Airbnb, ticker symbol ABNB, is currently a Zacks rank number 1 strong buy rated stock. And let's take a look at the recent earnings beat here. For the fourth quarter, it had a big earnings surprise, 78% earnings surprise. And in fact, it has been delivering consistent positive earnings surprises for the last four quarters. And I just wanted to add that in addition to travel demand, the results also benefited from higher interest rates. So these travel companies like Airbnb, we know that they take our money at the time of the booking, and those bookings are are somewhat cheaper if you pay upfront, and whereas the money is passed on to the host after you check in. So this gap could be months between the date when travelers pay and when the money is passed on to the host, and that money is being invested in money market and other safe short-term securities. And because of higher interest rates, travel companies are earning a lot of income on those investments. Now, due to these excellent results, we see that analysts have been raising their estimates for the company for the current year as well as the next year. They have gone up significantly over the past 2 months since the company reported results. And that is why the company is Zacks rank number 1. Now, stock has done very well. You can see the year-to-date performance here, and it is actually up about 40% year to date, but that comes after it plunged almost 50%. It was cut in half last year. So because of this surge, the stock is not cheap. Valuation is somewhat stretched, trading on a forward multiple of almost 35 times. Now, one thing I wanted to add is that unlike many other technology companies, and Airbnb trades like a technology stocks, unlike many other new technology companies, Airbnb has a solid balance sheet, and as I mentioned, it reported its first full year of annual profit, which is very rare among new technology companies. Another thing which Wall Street Journal reported recently is that Airbnb had actually cut its costs by letting its staff go at the start of the pandemic, and even after subsequent hiring, its total workforce is still about 5% below pre-pandemic levels, which is very different from many other technology companies that had hired aggressively after post-pandemic, after the pandemic, and they expected that post-pandemic demand would continue, and they are laying off staff now, and that we have seen many big technology as well as smaller technology companies as well. So good work by Airbnb for cost cutting as well. And with the recent results and the Zacks rank, the stock is worth a look. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. And also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And we will see you next week.